A warm welcome to all attendees. Thank you for joining on time. So you're all welcome to the first of a series of investor readiness webinars for 2026, brought to you by the UK-Ghana Chamber of Commerce and Deloitte. This maiden webinar is themed Ghana's Economic Reset, as you saw before you joined, Ghana's Economic Reset, what it means for the investor, but also for SMEs. At the end of this webinar, you can be assured of 3 key takeaways. 1, you can look forward to understanding how to position your business in Ghana to access the requisite funding for investors. Secondly, you can look forward to identifying the most promising sectors in Ghana based on current economic trends. And lastly, importantly, to understand where the opportunities lie for your SME in Ghana's economy and the 24-hour economic policy. Now, what's the catch for you in joining this webinar? You need to ensure you make it to the end of our 2-hour webinar. I'm excited to be your moderator for today's webinar. My name is George Annan. I'm a manager with Deloitte Strategy and Transactions Business with focus on infrastructure, capital projects, and real estate. So our webinar is structured in 2 parts. For the first session, we'll have opening remarks and a presentation to help us better understand Ghana's economic landscape and the concept of the 24-hour economic policy. Then secondly, which is the part 2, is what will involve you as attendees here through our Q&A feature. Importantly, with you as the attendee actively involved, what it's going to help us do is to make this webinar very practical. It's something that you can relate based on your experiences on ground. Secondly, for the second part, we've also brought together a team of experts who are active in the investment landscape, both in and out of Ghana. And importantly, for these experts, they'll be sharing success stories, what their practical experiences are sitting behind their desk and working actively in this space, and also what they see as the most likely trends that will develop in the market. So ushering us into delving in, we'll take a few housekeeping rules. As you may have noticed, upon joining the webinar, your microphone has been muted. This is to prevent any disruptions to the speakers and your other attendees. However, if you wish to ask a question at a point, you are welcome to raise your hand through the hand raise icon, and you'll be given access to do this. Alternatively to, as I mentioned earlier, there's a Q&A feature. So as the webinar goes on, feel free to drop any questions in there, and it will help us efficiently track and address any questions that come up. In the event the webinar is ongoing, but there are issues with the audio or video, please also feel free to drop this in the Q&A feature. Our technical team will quickly respond to, so you can get the best experience in this webinar. Again, I mentioned, ensure to stay glued for this 2-hour important webinar. Lastly, note that this session is being recorded for future distribution. And we're also live on our Facebook handles, that is the UK GCC and Deloitte Facebook accounts, but also Deloitte Ghana's YouTube channel. Okay, so diving in, we'll take our first part, which is the opening remarks, and it will be given by the partner in charge of strategy and transactions for Deloitte Ghana. He also doubles as the Africa head of infrastructure, capital projects, and real estate. Please help me welcome Yaw Appiah-Lartey to give us the opening remarks. Thank you.
Thank you very much, George, and good morning. Distinguished guests, colleagues, partners in business, clients, distinguished ladies and gentlemen who are participating in this all-important event. We appreciate your time and we appreciate your participating in this event. My name is Yaw Appiah-Lartey, as rightly mentioned. I am the partner responsible for strategy and transactions in Deloitte Ghana. I also lead our infrastructure and capital projects business across Africa. So I have the privilege of welcoming you to another edition of the UKGCC Deloitte Investor Readiness Webinar Series. We've had a number of this, and this also happens to be another all-important one with the theme Ghana's economic reset, what it means for investors and small, medium enterprises. I'm especially privileged to be part of this because I am not just a partner in Deloitte, but I'm a Ghanaian who's lived the various ups and downs in our economic downturns, the booms and the burns in our economic landscape. So these experiences have shaped my belief and understanding of periods where there are complexities to be dealt with by individuals and households, as well as businesses, and at the same time, where government intervention have made a lot of difference. So my personal reflection, over the past few years, many of us have felt the effect of the challenges of economic challenges. They've been daunting on not just individuals or households, but businesses alike. From the market women who had to recalibrate their pricing to entrepreneurs who had to find solutions, including some form of restructuring organization. It's been daunting, and the impact has been massive and material. And it's at the same resilience that underpins today's conversation. So the periods where there have been difficulties, there have been periods where there have been stability, and there will also be periods where things will look better. And this is only biblical. There are years of famine or years when things become difficult. At the same time, there are years when things become plenty or years of abundance. So without going into the details of what has happened in the last few years, we know that in the last couple of months, as a result of the instability in the Persian Gulf, arising out of the war between US, Israel on one hand, and Iran, together with the alliance partners on the other hand, we've seen a sharp rise in the global price of crude oil from under $100 per barrel to over $100 per barrel. Inflation pressure has eased. Inflation has gone significantly below government targets of 8 plus or minus 2, which is a very good development. Interest rates have declined. Currency has been fairly stable. And we've seen wave of significant policy adjustments, all aimed at maintaining and consolidating the gains that we've seen over the last year and a half. So Ghana's economic reset is not merely a response to shock. It's a recalibration that is forcing all of us, government, business, investors, individuals, to act differently, act smarter, and build stronger. What do we aim to achieve from this conversation? First, to bring clarity to Ghana's evolving macroeconomic realities. So it's one thing seeing all the macroeconomic indicators being reported out there, and it's another thing seeing it reflect in your pockets, as the ordinary man on the street will say. And so for us, this conversation is to bring some clarity as to how you see all the reports that you're seeing and the indicators being reflected in your pocket or your daily life. The second objective is to highlight which sectors are truly ripe for growth and transformation, what we see the economic reset. So there are a number of sectors that are experiencing all the positive indicators that we've talked about. There are others that are still being challenged as a result of factors that are both internal and external. So the idea of this conversation is to understand which sectors are ripe, have got a future, have got prospect for growth and expansion. The second is to empower SMEs with tools to adapt and scale. So we are here to help SMEs appreciate what tools, what strategies, what reforms they need to put in place to not only survive, not only maintain and manage the existing business, but to grow and scale. This last, I would say, is to outline clearly what Ghanaians economic reset means for investors. So yes, at the government level, it's an economic reset. But for you as an investor, what does it mean for you? For you as an SME, what does it mean for you? And for you as an individual who work for private sector clients or a private sector player or a public sector employee, what does it mean for you? So what to expect? You have sections of very good, well-researched presentation from the Deloitte team, a panel discussion with seasoned experts, an interactive Q&A session where you'll be given the opportunity to share your thoughts. A note of appreciation. Let me acknowledge the incredible partners who made this possible. UKGCC, Deloitte team members, Ghana Venture Capital and Private Equity Association, having nominated their CEO to be part of this panel. We really appreciate your time. The Ghana Investment Promotion Center and other panelists from other governments or private sector institutions joining us. We really appreciate your time. To you, the participants, we appreciate your time that you've taken off your busy schedules to be part of this conversation. We welcome your comments, your contributions to this event. Today's session is not just about preparation for investors seeking clarity, for SMEs seeking resilience, and for Ghana as a chart for season growth. It's about us sharing ideas to be better business leaders, to be better employees, to be better Ghanaians. We do not want to leave this conversation as spectators. We want to leave these conversations as seasoned citizens of Ghana. Thank you very much.
Thank you, Yao. Thank you, Yao. Very straight to the point and very clear. Thank you very much. You just heard from the partner in charge of strategy and transactions at Deloitte Ghana, and also doubles as the Africa head infrastructure, capital projects, and real estate. So as Yao mentioned, Deloitte has a presentation on the overview of the investor landscape and to give us a better appreciation ahead of the panel discussion. And for this, we'll have one of the senior managers with Deloitte Strategy and Transactions team. I'll read a brief profile of our resource person, Peter Chawe. So Peter is the lead for infrastructure, capital, projects, and real estate in Deloitte Ghana. He has over a decade's experience in project finance, transaction advisory, and infrastructure development across Africa. Peter's expertise span business planning, feasibility study, investor engagements, and modeling, financial modeling across major infrastructure projects. Peter has advised on large ticket transactions and notably being the lead consultant for the Buankra Integrated Logistics Terminal. He has also supported on regional development initiatives by the USAID backed by the YALI program. Peter is also a writer and a speaker on finance. Please help me welcome Peter Chawe to give us a presentation on the investor landscape for Ghana. Thank you.
Thank you, George. Thank you, George. First of all, to say a big thank you to Yao Latte, our partner, our lead at the infrastructure and capital and the real estate projects units at Deloitte. The intro was insightful. It gave a good overview. So what I'm seeking to do is to give some numbers to some of the highlights, Yao has given in the introduction. So again, I welcome you all, depending on where you're joining us from. We say good morning, good afternoon, good evening, and welcome to this session with Deloitte. So our presentation is on Ghana's economic reset, what it means for investors and the SME. George, just to check if you can see my screen. Is it moving?
We can see your screen. We can see your table of content. You can
Excellent.
Go ahead. Yeah.
Excellent. So that's a table of content. We're going to run through this very quickly. The first being Ghana's economic reset, the macroeconomic environment, what the economic reset means for investors, what SMEs should do now, sector level opportunities in the reset economy. So here we'll be looking at agriculture, industry, and then services sectors. Practical frameworks for evaluating the opportunities, and then Deloitte's capabilities and approach in supporting both, investors, SMEs, and key stakeholders who find themselves within the space of investment and project finance and project implementation. So Ghana's economic reset, I'll just start by saying it's a strategic framework or policy framework spearheaded by the current administration aimed at transitioning the country or the nation from structural economic challenges that we witnessed in the recent past, using tools or policies like the 24-hour economy, among others. So for investors in small and medium enterprise companies, this becomes a shift, to move towards macroeconomic stability. So this comprises fiscal, monetary, and structural reforms aimed at restoring macroeconomic stability. And the reforms seek to reduce debt vulnerabilities, stabilize inflation and the currency, strengthen fiscal discipline, and rebuild investor confidence, thereby laying the foundation for a sustainable economic recovery and growth. There are 4 key elements we want to present to you under this first reset overview. Number 1 is the debt restructuring process that is still ongoing at its very tail end. Then number 2 is the IMF supported reforms. And then the third is fiscal consolidation efforts. And then the fourth is monetary tightening measures. The first 2 are, mainly external, occasioned by what happened internally. And then the next 2 focus more on what we are seeking to do as a country to correct all this that is happening. So on the debt restructuring process, Ghana's public debt reached approximately 575 billion, about 93% of GDP, as of November 2022, promoting a comprehensive debt restructuring program. And if you know how these things work, 93% of your GDP in debt is really huge, depending on how your economy is actually structured. Elsewhere, other countries have even more than this. But since they are able to generate more revenue internally, that isn't as big an issue as it was for Ghana in 2022. In 2023, Ghana implemented the domestic debt exchange program as a result of this, debt issues the country was facing, seeking to restructure about 203 billion of domestic bonds into new instruments with lower interest rates and extended maturities. Ghana also reached an agreement with its official bilateral creditors under the G20 Common Framework, securing approximately $2.8 billion in debt service relief between 2023 and 2026. So the very last occasion happened just early this year, which was the 8th, led by the finance minister, and it was with Belgium. And previous countries have been France, the United Kingdom, and then the China Exim Bank. In 2024, Ghana restructured approximately 13.1 billion in Eurobonds, achieving about 4.7 billion in debt relief and extending payment timelines into the 2030s. So that's answer for the first pillar. The second pillar is the IMF-supported reforms. In May 2023, Ghana secured a 3 billion extended credit facility from the International Monetary Fund to support macroeconomic stabilization and structural reforms. Now, the program introduced reforms in tax administration, public financial management, and state-owned enterprise oversight to strengthen fiscal discipline and improve transparency. By December 2025, Ghana had received about 2.8 billion in IMF disbursements after completing 5 previous reviews. On the third leg, we're looking at the fiscal consolidation efforts, as I mentioned. So these are more internal. What is Ghana doing to, move away from the dire straits it found itself in? The government implemented several tax policies and administrative reforms to strengthen domestic revenue mobilization, with tax revenue standing at 17% in 2024 from 13% in 2022. So 70% of GDP to 13% of GDP. And this is projected to approximately 18% of GDP by 2025. Now, compared to our peers in the West African sub-region, we are looking at somewhere between 20 and 22% of GDP. So Ghana's 18 to 20% is actually a target seeking to achieve so as to, ensure more revenue mobilization. In places like South America, it's even higher, and then in Asia, you can see higher figures. So there's the international benchmarks for Ghana to actually follow. Fiscal consolidation measures and spending controls helped improve the fiscal balance. The overall fiscal deficit improved from 8.1% of GDP in 2022 to approximately 3.2% of GDP in 2023. And it moved to 4.1% of GDP in 2024, and it's around 3.8% of GDP in 2025. Now, what this means is, of your GDP, you want to remain within surplus levels and not within the deficit region. So under the IMF supported program, Ghana aims to maintain a primary fiscal balance or surplus of around 1.5% of GDP over the medium term. It's a way of moving you away more from the debt we found ourselves in as a nation. And for policymakers, for the government, if Ghana is able to become more prudent, that is one key way of attracting investors in the economy. The fourth leg is the monetary tightening measures to contain inflation and stabilize the currency. The Bank of Ghana increased the policy rate to 30% in 2023, representing one of the most aggressive monetary policy tightening in recent years. Now, Bank of Ghana reduced this further in 2024 to 27%, and currently is hovering around 15%. At the next meeting of the Bank of Ghana, we have indication there may be probably further reductions depending on how things run on the market. Now, what the Bank of Ghana does is they target inflation, and it becomes a very powerful tool in stabilizing the economy. Inflation, when it is very high, takes away from people's pockets. Inflation, when it's very high, increases price of goods and services. So if inflation is targeted right and within the right band, it helps to stabilize the economy. There's predictability, there's proper planning. And for the Bank of Ghana, the target is between 8% plus or minus 2. That's the band that they've been working, towards, so as to ensure if they do lower, it helps. But otherwise, the upper limit they are always looking at is to remain 8% plus 2. The next point is tight monetary policy, fiscal consolidation, and exchange rate stabilization to contribute to significant decline in inflation. So it comes back to the inflation dynamics. Currently, inflation is hovering around 3.3% as of February 2026. Then the next bit is improved macroeconomic management and stronger external buffers, as is currently run under the IMF program to ensure stability in the currency. So Ghana's economic reset is gradually, restoring macroeconomic stability and reshaping the investment landscape. As stabilization takes hold, investors and business people or businesses are adjusting their strategies in response to evolving economic conditions. So here we're looking at 3 key areas. Number 1 is investment timing decisions, which are emerging. And then we're also looking at SMEs who are adapting to tighter financial conditions. And then we also look at capital as being available, but more selective. Then the question is why. So we'll delve into that. So Ghana's economy has begun to show recovery. GDP is improving from 3.1. We're looking at about 5.7 projected for 2026. And then SMEs to continue to face pressures from, high costs of borrowing. I mean, that's one of the key things that has been, bothering SMEs for a while now. The policy rate declined from its peak of 30%. We're looking at 15.5%, like we mentioned, and hopefully at the next Monetary Policy Committee meeting by the Bank of Ghana, the expectations for that to come lower. Now, what does this mean for the SME space? When the Bank of Ghana reduces the policy rate, it has a trickle-down effect through the banks because they factor this in their pricing of capital, meaning that it becomes one of the key components adding to their pricing of interest rates. Apart from that, they have other factors like, risk premium, looking at the borrower and then checking on whether they default or not. So for SMEs, one of the key things you want to look at is to be sure that you are a low risk for the banks. That way you can enjoy lower rates. Despite tighter credit conditions, Ghana's gross international reserves increased to about 13.8 billion by the end of 2025, providing a strong liquidity buffer. This improvement was supported by foreign exchange accumulation and market stabilization measures by the Bank of Ghana and the country's program with the IMF. You all recall how the Ghana cedi improved, and what that meant was instead of having more cedi to buy dollars, we needed less cedi to buy dollars, and that helped to shore up our international reserves. That's one factor. Apart from that, the sale of gold, among others. Investors, however, remain selective, cautious, focusing on low risk, well-governed, and high-performing businesses. As we go along, we learn more about some of the areas investors are looking at before they dive deep into certain, investment opportunities within the country. So we mentioned inflation. You can see the trend in the graph from a peak of over 50% in 2022. It's now hovering about 3.3%, as we mentioned. It's mentioned, or it looks like it may go up a bit, but I guess that's where the Bank of Ghana comes in. They check the heat of the market and then see how to use their policy instruments to stabilize within their band of 8 plus or minus 2%. The next key indicator is the monetary policy, like we mentioned earlier. So that's the graph. Again, you can see it is trending downwards. When it is trending downwards, what it means is the Bank of Ghana is exercising its easing policy of the easing stance of the monetary policy. And when it is up, it means they are actually tightening things up. What it means is there'll be less liquidity within the system. If interest rates are high, the banks are also not, likely to be giving more people, businesses, individuals would also not be borrowing more. So it contracts the money supply in the economy. But then when there's easing, then relatively money becomes cheaper. And one of the things Bank of Ghana is seeking to also do is to guide the lenders or banks towards, pumping the money into the real sectors of the economy instead of just doing treasury bills as they have been doing for some time now. So that's an overview of the monetary policy environment. Then the next bit is the exchange rate environment. Again, the volatilities during the crisis has begun to moderate again because of different instruments that is happening within the environment. So, for example, the Ghana cedi experienced significant volatility in 2022, depreciating over 50%. But kindly, it's appreciated over the last 1 year, 2025, over 40%. At the time in 2022, the Ghana cedi was one of the weakest, most vulnerable currencies in the world. And come 2025, because of all the difficult measures that had to be taken, including being prudent with expenditure. The Ghana cedi became one of the strongest currencies in the world. So the exchange, following the implementation of the IMF program, debt restructuring, and improved external reserves, the cedi has shown greater stability since 2024. So for businesses and investment implications, we're looking at currency depreciation, increasing export costs for businesses reliant on foreign inputs. So this is one area we would look at, when it comes to policy advice to policymakers, how to ensure, that the country is more reliant on import substituted products and services rather than being focused more on the international market. What happens is you have to have more cedis to chase after the dollars used in purchasing those imports. And that means that your cedi becomes cheaper against those international currencies. So the question is, what the economic reset means for investors. So that's what we're going to delve into on this particular slide. Now, the first bit is the restored stability and confidence in the market. Ghana's economic reset, driven by fiscal consolidation and the IMF supported program, has significantly improved macroeconomic stability, as we saw. So we've seen the GDP growing and, the indications of it even going further in 2026. The next bit is the focus on infrastructure and industrial investment. So Ghana's reset strategy prioritizes industrialization, infrastructure development, and export-led growth. And the key areas are strong non-oil growth driven by services, industry, and the trade sector, and then government's focus on industrial parks, logistics corridors, and export-oriented manufacturing hubs, increased investment in energy, transport, and digital infrastructure, and then extension of public-private partnerships. When it comes to the logistics corridors, one of the key things that has been found, not only in Ghana, but then across Africa, is that once the policy makers have these strategic partnerships and these corridors are built, it helps to attract investment in various related allied industries. So Ghana, there are quite a number of these corridors. You have the Western Corridor, the Eastern Corridor, along the Volta Lake. And then there's one that runs from, Lagos to Accra to Abidjan. It's also known as the West Africa, highway. So what governments are doing within their economies is to focus domestically, but then also align sub-regionally and then regionally. So the ECOWAS one, for example, in Accra, we know is the George Bush Highway that goes from all the way from, the Aflao border straight to Elubu and connects to Abidjan. So from there, it goes to Lomé, Benin, Semeboda in Nigeria into Lagos, and it goes on and on and on. If you look at other parts of, West Africa too, from Cabo Verde to Senegal to the Gambia, Guinea through Liberia, Sierra Leone, and then into Abidjan. So there's that commitment across Africa, across the sub-region, to focus on these infrastructure hubs to ensure that allied services and industries also grow. And that's what has been noticed. The point is, Africa had wanted to unite politically, but that has eluded the continent. But there's light along the tunnel when it comes to regional integration along the lines of trade corridors or economic corridors. The next bit is capital market opportunities. Again, here too, Ghana was cut out of the international capital market. The stock exchange was not doing as well as it should have because of the domestic debt exchange program, but now things are improving. And one big way to mobilize capital in any economy is, apart from the traditional ways, is also to go through the stock exchange, where there's a pool of resources, cheaper funds, patient funds, which is very much needed for investment purposes. Then we also look at manufacturing and agriculture, where we then look at the three key sectors driving the economy. So agriculture's contribution to GDP, which we've seen is doing well, with opportunities in agribusiness processing and exports. Manufacturing focusing again on agri-processing, pharmaceuticals, and automobile assembly. And then we also have the investor opportunities, where agribusiness, export-oriented light, manufacturing, logistics, storage, and technology are also the focus. I'll touch a bit on the automotive industry. Since 2020, Ghana has had a policy driving the attraction of original equipment manufacturers and some of the big brands in automobile manufacturing. And so you have the Nissans and then the Toyotas and the Mitsubishis and others pitching their tent in Ghana. Now, what is happening is Ghana does a lot of importation of vehicles, apart from the other areas in agriculture that Ghana imports, like poultry and then rice and others. In fact, poultry alone, the bill is over $400 million dollars yearly, not if not more. And then the automotive industry too is one area that Ghana sees a lot of importation. So the whole idea is to substitute that gradually with assembling plants, which would eventually lead on to become manufacturing hubs in Ghana. So that's one area that potential investors can actually look at when it comes to import substitution. Pharmaceuticals also provide another key area. We will delve deep into this as we go along, and we juxtapose that against the growth in the economy and then the growth in population, among others. So what should the SME do now? So Ghana's economic research creates opportunities, but SMEs must adapt strategically. They should also seek to survive and scale. The post-reset economy would reward discipline, adaptability, well-structured SMEs, and not just those with capital. So there are four key areas we're looking at here. The first is a strengthened financial discipline within the operations, alignment with high growth sectors, improved access to finance strategically, and then building resilience in competitive markets. So being financially disciplined gets to the core of operations of every business or every SME. You have your top line, you have your midline, and you have your bottom line. What happens in the middle line or midline is as important as what happens at the top line. If your top line is good, but your bid line is not good because of overspending, your bottom line suffers. Those are some of the disciplines that we will be actually advocating for SMEs to focus on. Alignment with growth sectors. Again, if you listen to the news, you get to know the areas the government is focusing on, where the enabling environment is actually being created in infrastructure, in fintech, in pharmaceuticals, among others. Then access to strategic financing. I mean, apart from the traditional ways of accessing financing, there are now more innovative blended ways of financing. Even the governments are now focusing more on things like PPPs. What PPPs do is to get on board private sector who strategically take off the burden of the government providing financing. And that way, the government then focuses on monitoring, supervision, and ensuring compliance with statutory obligations. Then the private sector runs the businesses strategically as entrepreneurs, as they should be, bearing in mind their top line and then their bottom lines. So a snapshot of the key sectors. I think we mentioned this earlier, so we'll run on this slide quickly. So we have services, which is leading with, about 39%, 39.7%. Then we also have, industry, and then we have agriculture. These three keep shifting in their percentage composition depending on where the growth drivers are coming from. But for some time now, services has been leading. So you question or you ask yourself why services has been leading. So if you have areas like, health, technology, logistics, digital finance, and areas like that doing well, then those feed into the service provision that, we are looking at. So the key drivers there are structural demands and policy alignment. I mean, when the government moves into a certain area to provide the enabling environment, as we're currently seeing with the big push, which is pushing for more infrastructure development, then that tells you there'll be more funding or financing that will, propel employment, and then individual households will also improve, and then that adds to aggregate demand. What aggregate demand does is it creates a multiplier effect that helps to drive GDP. So for some of the structured growth or attractive areas, I think I mentioned some. Mining is one, logistics, digital finance, and healthcare. And then for the high risk but momentum sectors as well. I mean, the basic is as you expect high returns, you should also be mindful of the risk that comes with it. So there we're looking at retail, luxury real estate, and then import trading. So luxury real estate, if you look at the skyline of Accra nowadays, everywhere has become a construction site in Ghana. And that is actually what is happening. And the fuel for that is the expatriate market and people in the diaspora, high net worth individuals in Ghana, patronizing or buying or getting into this real estate market. So that's another area, but it also comes with its risk and all that. Then the risk areas, of course, demand fragility, financing constraints, and then interest rate exposures. Financing constraints, you actually need cheaper patient capital to get into certain spaces. And that brings us to one important, key area in Ghana when it comes to borrowing. Our rates are relatively higher than our, neighbors in other countries. And I guess this is what the Bank of Ghana is seeking to do to moderate interest rates so that people can have access to financing. And once they have access to financing, they are able to, expand on their businesses and then grow their businesses. Agriculture, we have noticed, is one of the drivers of the economy. Notable among them is cocoa. There's so many other, areas we can actually look at. So apart from cocoa being a traditional export, we also have the non-traditional exports like cashew nuts, oil palm, pineapple, mangoes, among others. But then I'll delve a bit on the aspect of cocoa. So Ghana previously was the #1 producer of cocoa in Africa or in the world. I beg your pardon. It was overtaken by Cote d'Ivoire and is now the second producer of cocoa. As at 2020 thereabouts, Ghana was producing over 1 million tons of cocoa. By 2023, 2024, that had reduced to about half. And then you ask a question why, the question why. One of the key things is, use of bad practices, and then the mining practices, which has actually shifted the focus from, areas within the cocoa sector onto the mining sector. So the government is mindful or needs to be minded about increasing, the production of cocoa. So the 2025-2026 crop season is targeted about 750, metric tons. Industry, we have seen briefly, so I'll touch on this as well, and then we move, and then I just focus on cocoa. I mean, on gold. So when it comes to industry, there are various sectors that investors can actually, focus on. But then the gold sector has been driving the economy for a while now. Ghana has been at the forefront. In fact, when it comes to gold production, it's actually the number one on the African continent. Previously, it was South Africa, but then Ghana is now leading that. So there's the effort to streamline, there's an effort to structure, there's an effort to strengthen the value chain with the introduction of the Ghana Gold Board. So one of the key things they're looking at is making Gold Board like the Cocoa Board, which is solely responsible for the purchase, the assaying, the processing, the export, so as to ensure, there's a lot of value within the sector. But the government is also encouraged to be mindful of, the artisanal, gold mining space. And the gold mining space is actually controlled by two key players. So the traditional big players and then the artisanal small-scale miners, who are the latter increasingly becoming very important within the space. And so that calls for a lot of policy, a lot of regulation, a lot of training, and then a lot of compliance to ensure things are done right. So Ghana is currently benefiting from, global commodity dynamics. Gold is actually doing well at the world market. But then in times of boom, you also have to be mindful of keeping some storage or diversifying so as when the curve goes the other way, you are actually, cushioned. The next step is the services sector, which is also a key driver of growth investment opportunities. And key amongst them is digital. We know how the fintech space is driving a lot of, businesses. Nowadays, post-COVID, you can't do credible, good, thriving business without relying heavily on digital, remote, virtual infrastructure. Nowadays, you can't, also be thriving if you don't rely on, digital finance. So those are very big areas that have come up within the economy and is driving a lot of, trade and services. The next is logistics and trade infrastructure. We mentioned this in the context of what is happening within the various trade corridors in Africa. I'll give you an example. Because of the focus on trade corridors as, dynamites or powerful tools in integration and trade and business, if you look at places like, Angola through Zambia through the copper belts of DRC, there's a huge, concentration of this, corridor. And then there's one that links from, the Zambia copper belt again through, places in the East African country to the borders. All these are happening because these are the drivers. And that's how come you see the big push as one of the key policy agendas of the current government. We are just very hopeful, that, they actually get things right. Plan, execute, and execute successfully. So one of the areas you also see is the Central Corridor. I mean, the two key major cities within Ghana do not have very functional dual carriage system connecting the two countries, Accra, Kumasi. You do Accra, Kumasi in about 4 or 5 hours, which should, in essence, take just about an hour if you have a good transportation system. So those are the drivers of various infrastructure and investment. So if you're looking at investing within the economy, those are some of the areas you should be looking at. Healthcare is one of them. Yes.
Yeah, sorry, so you don't lose your trail of thought. I've already
Yes.
started seeing quite a number of questions come in. So
Good.
we could also jump into the panel session and invite our attendees in. If
Yes.
we could use the next 5 minutes to catch up on the key pointers, then we can
Excellent.
wrap up. Yes, and then we can move to the panel session.
Excellent. Excellent.
Okay, thank you.
So the services sector too, we saw, we mentioned real estate, the digital economy. I think this is also a repetition. Then now we're looking at the practical frameworks for evaluating the opportunities. For various investments, we're saying that try and do your micro screening, do your sector fundamentals, do your business quality assessment, and then do your risk adjustment assessments. So for micro screening, you're looking at assessing whether the country environment supports whatever it is you're doing. And then for the sector two, you're looking at various sectors to see which ones have the high returns, geared towards or aligned with what you're seeking to do. And then for the business quality assessment too, you also want to evaluate the company and the investment itself to check on investability, risk return adjustments to whether you make money against the risk you're getting yourself into. So we have certain policy prescriptions or insights or advisory for both policymakers, entrepreneurs, and investors. Thankfully, in my presentation, I kept touching on some of these areas. So I'm going to run very quickly. I touch on for the policymakers. SOEs are institutions that run businesses. Focus on getting private sector to run such businesses and make profit. If you hear statements like SOEs making losses over several years, the question is, then why are you still in business? You look at your top line, your bottom line. You should be making profit, but not losses over a long period of time. So the policymakers should be mindful of those areas. PPPs have provided some very good strategies for financing and implementing projects. SMEs, entrepreneurs, to be guided about the policy directions, be guided about your due diligence, be guided about your feasibility. Investors too will not only go into a space where there's money, but they also go into a space where there's discipline. So that calls for discipline from the policymakers, from government implementers. So we're saying that at Deloitte, we provide these services that you're looking for to align on the investment space. Over 400 staff, 14 partners. We're located in Accra, have visibility over the country, not only in Ghana, but then within West Africa with offices in Lagos and Abuja. And we have three main streams of services. I'll unpack them quickly. So we have audit and assurance, tax and legal, strategy, risk and transaction, and then technology and transformation. So under audit and assurance, we have things like external audit, among others, tax and legal. You can see that on the screen. And then you have strategy, risk, transaction, and then technology and transformation, doing things like customer, cyber security, operational, industry, and then domain solutions. So I focus finally on strategy, capital, and real estate, where we have strategy and business design, infrastructure and real estate advisory, M&A, that is mergers and acquisition, valuation and modeling, structuring turnaround and cost transformation and sustainability. In a nutshell, Deloitte is available to support you in your 360 investment decision, in your 360 due diligence, in your 360 advisory, in your 360 packaging of various documents for different stakeholders, including bankers, lenders, your internal strategic team, project promoters, among others. As a one-stop shop, you come to us and then we give you a holistic, service along these lines. On that note, would like to say a big thank you for indulging us for this while as we unpack, Ghana's reset agenda on the economy. What is in it for industry? What is in it for the SME? What is in it for the investors? Thank you very much. Thank you.
Thank you very much, Peter Chawe, Senior Manager with Deloitte Strategy and Transactions team, focused on infrastructure, capital projects, and real estate. It has been very insightful. And a good point to mention that this webinar comes to you by partnership between the UK GCC and Deloitte. We've seen our numbers spike a lot since we began the webinar. I think it's a good point to quickly do the housekeeping rules again just before we enter the final session, which is the panel session. for which we have you as attendees be actively involved. So a quick run through the housekeeping. We'll keep all microphones on mute to avoid disruption of speakers and attendees, but feel free to use the hand raise icons at any point. An alternative is to use the Q&A feature, for which some of you have already started dropping a question or two to help us track the questions. If there are any technical issues with audio, video of any of our panelists, again, use the Q&A feature and our team will respond. We are also looking forward to you being actively involved in the second session, where we are able to see the practicalities of some of the challenges and how to go around. And then lastly, we are streaming on UKGCC and Deloitte's Facebook accounts, as well as Deloitte Ghana's YouTube channel. Thank you very much. So delving into our panel session, we've put together the team of experts, and for making sure they deliver as much as possible, we'll go through their brief profiles, an abridged version of their profiles, because obviously these are high-level experts in town. So a brief version of their profiles, and then we can get started. Being in the month of International Women's Day, I think it's ideal we begin with our lady panelists. So first on our bill is Madam Ama Jampo, the CEO of the GVCA, that's the Ghana Venture Capital and Private Equity. Ama is a strategic advisor and ecosystem builder for 20 plus years of global experience across consulting, telecoms, impact investment. As the CEO of GVCA, she drives growth of Ghana's private capital market through innovative financing and policy reforms. She's the co-founder of Scale Up Africa and serves on the board of Impact Investing Ghana, championing entrepreneurship, catalytic capital for development. Her thought leaderships have featured on Forbes, BBC, CNBC, the New York Times, and TEDx centers. She's recognized as a MIPA Top 50 Global Influential. Ama is also a leading advocate for social impact and economic empowerment for women and youth. Please help me welcome Madam Ama Jampo. Thank you, Ama. Great. Okay, so moving to our next panelist, we have Ms. Cheryl Otu. Ms. Cheryl Otu, a senior manager, also with Deloitte Strategy and Transactions team, focused on strategy and business design, which Peter spoke about. So brief highlights of Cheryl's profile. Cheryl has over 12 years experience delivering consulting and advisory services across Africa internationally. Her expertise span economic and SME advisory, market research, feasibility study, and public finance management. She has led complex engagements for public sector clients, DFIs, and multinational organizations, such as financial services, energy trade. Cheryl has worked with partners including the UNDP, the World Bank, FCDO, AFDB, and many more. Prior to Deloitte, Cheryl has experience with EY Consulting Nigeria, KPMG, and the UK Department for International Trade. Please help me welcome Cheryl Otu. Thank you, Cheryl. Okay, so moving on to our last but one panelist, this is Dr. Asafweje. So Dr. Asafweje is the Director of Monitoring and Evaluation at the Ghana Investment Promotion Center, where he oversees performance management, compliance, and the impact of investment promotion initiatives. He's an economist specializing in macroeconomic and FDI, foreign direct investments, and he holds a PhD from the University of Witwatersrand. With over 17 years at GIPC, Dr. Asafweje has led major reforms, including comprehensive M&E frameworks, revenue assurance, and Center First Enterprise. Doc represents Ghana at a high-level investment forums and serves on national bodies focused on industrial development and economic growth. Please help me welcome Dr. Asafweje. Thank you, Doc. So our last, but definitely not least, is also an active player in the finance space in Ghana. We have Mr. Cedric McAddy, the head of SME Banking and Business Banking Group. So Cedric is a seasoned banking and business executive with nearly 25 years of experience across financial services, retail, manufacturing, and utilities in Africa and Europe. As a head of micro and small enterprises at GCB Bank PLC, he leads strategy for a nationwide network of 100,000 plus customers, managing 184 centers and 350 staff. He has grown MSE deposits from 264 million to over 2 billion. So all your questions on SME financing, we also know which panelists we can fire most of them to. And built a zero NPL loan book and driven innovations in product, digital analytics, and operational controls. Please help me welcome Cedric McAddy of GCB Bank. Okay, so thank you very much, panelists, for joining. And we'll delve right in. And attendees, please feel free to put in any questions as the session goes on. So Amma, if it's fine, we'll be happy to begin with you and any insights you like to share. So maybe first off, just in 2 sentences, tell us what the GVCA does. In two sentences, what the GVCA does, yeah.
Sure. Ghana Venture Capital Association is our industry association for venture capital and private equity fund managers and transaction advisors. So thank you to Deloitte, who's one of our members and partners, for supporting the transactions in this space. And it's really just to say that, you know, apart from the banks that we all know and credit and loan conversations, venture capital and private equity is very much the flip side of that, option for SMEs to explore for their financing and growth requirements.
Solid. Thank you, Amma. So Amma, a first question we want to hear your thoughts on. Given you've been in the space for a while, in your view, what are some of the specific policies you think we can see from the government side that will make it easier for venture capital and private equity firms to invest in SMEs? So there's a willingness to invest in SMEs, but are there certain policies that will be key enablers to make sure this is done?
Yes, I mean, we are competing in a global and regional marketplace. So, of course, we as an association are advocating for the legal and the fiscal frameworks to match at least our regional competitors like Mauritius, like Rwanda. There are other, markets that are far ahead of Ghana in terms of our competitiveness as a venture capital and private equity destination. So we are pushing for Ghana to at least match those areas by establishing the legal framework. So primarily the Limited Partnerships Act is something that we are working with through an interagency committee with the Ministry of Finance, with the Security and Exchange Commission, with the National Pensions Regulatory Authority, the ORC, the Register of Companies, to really make sure that Ghana is prepped and primed for at least some level of equity with other more mature markets so that we can be more competitive as a destination for fund managers to come and set up their funds and invest in our private sector locally without any limitations. So currently we don't have that, which is a major setback for our nation, and also it makes us less of a desirable destination for fund managers and capital that could be going to our small businesses to help them to expand. So I think that's a primary focus for our association right now, to just make sure that we get that level of support from the government, from the Ministry of Finance in particular, who are our partners, to make sure that we expedite some of those legal and, of course, the fiscal tax incentives that would enable us to be more competitive, and also to develop our own private domestic capital markets, which are key. Because I think for us, we see that everyone talks about FDI, foreign direct investment, all the time, but we also need to make sure that we lay out a bit more of a red carpet for our domestic capital allocations. We're currently sitting on $7 billion worth of domestic assets that are just not engaged in our domestic economy through the pension funds, for example. So to get a slice of that, we need to make sure that the incentives and the regulatory stability is there to ensure that we do protect pensions, fiduciary obligations to their contributors, but also encourage and incentivize and make it easier to reduce some of the barriers and the bottlenecks to attract more allocations from within our country into our own domestic private sector development requirements to feed into the 24-hour economy, and also all the sectors that Peter Chawe just outlined, and that Yao also outlined it in his introductory speech. We need to just tie up those elements and not overlook the domestic capital that we are actually sitting on, as well as the attracting foreign direct investment.
Thank you, Amma. Very elaborate, very elaborate. Thank you. So, looking at a topic for today's conversation, Ghana's economic reset, what it means for investors, and then also for SME. So, for anyone on this call has an SME, has a business, has an initiative they are looking at, to come from the SME angle, we notice that many SMEs get seed funding, but usually struggle to reach the growth stage. In your view and experience, how can government and private investor networks work to fix this gap where there is seed funding, they start all right, but there is always that gap where there's a struggle to get to the next stage of growth?
Yeah, I think unfortunately we've had a lot of, I don't know the figure, but we've had probably billions of dollars of entrepreneurship related interventions from government, from donor partners and international development partners, but it has not translated into business models that would really move the needle in terms of, solidifying and growing our infrastructure around our value chains, our supply chains. And it's through these supply chain and value chain related matters that we will actually bring up more individuals and citizens from our informal sector, for example, our young people that would want to feed into some of these value chain and supply chains, that we will actually see a more robust situation where we are having more people paying their taxes through their salaried, sustainable jobs, through the companies that we are actually investing in and supporting. So I think we need to focus more on the fundamentals. We do have a very active entrepreneurship and SME related ecosystem in Ghana. There are hubs across the country. We've seen organizations like Impact Invest in Ghana and Ghana Venture Capital Association year by year promoting entrepreneurship support, policies that would support the entrepreneurship ecosystem, looking at what the Ghana Stock Exchange is trying to do, partnering with each other. But we haven't quite, dealt with the fundamentals that are required to grow our businesses in ways that are sustainable, that could create jobs. And yes, the micro and the small businesses drive our economy. We know women are very active in the private sector, especially in the informal sector. We drive the economy. But in terms of the businesses that will create the jobs at scale for multiple individuals to actually contribute and plug in, I think we need to really focus on the demand-driven side of our economy, the productivity drivers of our economy. As we've seen in some of the presentations today, we need to move from a T-bill economy to a productivity-led economy. And that's what the potential of the reset offers us. But again, as our previous speaker said, it's really about execution and making sure that we have all our ducks in a row, and that we can actually deal with the fundamentals of our economy to be more productive and to feed into the businesses and the ventures that would actually create the jobs at scale. And they may not be the small and micro businesses per se. They would probably be the actors that would, be pulled up through the value chains that are created. But we need to make sure that we are focusing on the right levers to pull in terms of our industrialization and the implications for our domestic investors and our domestic producers and suppliers, manufacturers, industrialists, and ventures, for example.
Okay, thank you, Amma. That's very, very helpful. So, Doc, I'll come to you, Dr. Safwe J. You are with the GIPC, and you've been there for quite a while, over 15 years with the GIPC. Maybe first off, a lot may know, but a few may not know. Can you give us a sense of what the GIPC does, particularly in relation to SMEs and entrepreneur promotion in Ghana? Can you give us 2 sentences to highlight that?
Thank you very much, George. For GIPC basically is the marketing arm of the government in terms of investment promotion and facilitation for both domestic and foreign investors. On the domestic front, what happens is that we do roadshows, we try to prop up individual businesses, profile them to see how best we can create a joint ventureship for various companies that need so in partnership with either locals or foreigners. So on the SME front, that's basically what we try to do to make sure that at least we create the needed partnership going forward.
Okay, thank you, Doc. That explains a lot. So, Doc, my first question, similar to on Ahmed's side, given you are a government agency, we know about the new GIPC bill, which proposes new investment thresholds for foreign investors. In your view, how do these changes protect local businesses while still attracting investment? So that balance, when now the bill proposes a threshold for foreign investors, is how does it protect local businesses while still attracting the investment that is required?
Thank you very much. For the new GIPC bill, I must say that it's been on the drawing board since 2017. It almost passed in 2024, if not for the last session of Parliament where they couldn't really do business. So subsequently, the new government decided that we should have a look at it again and then also ensure that certain policies align with the government's vision. And so for the new bill, the interesting aspect is that the president has highlighted that, I'm sure, in most of his foreign travels, we are trying to take away the minimum equity requirements for most of the sectors. I say all the sectors, probably apart from trading. Our reason for doing so is simple. It's not making us competitive. You look at even the West African sub-region, we are the only country that has a blanket minimum equity requirement, which says that before you establish a business in Ghana, you must, with a Ghanaian partner, the foreigner must have 200,000 USD at a go before you can even commence the business operation, and 500,000 USD if it's a wholly foreign-owned business. And then trading businesses, you are supposed to have $1 million US. We realize that it's not making us competitive. And looking at some of the issues the presenter Peter highlighted, some of the challenges the economy went through in 2002, 2003, it made us a bit more competitive. So the vision of the president is for us to take out the minimum equity requirement. The other reason we are taking out that is also the fact that we have sector regulators that have their own minimum equity requirement. So it becomes like a double-edged sword, sort of. You have to meet two layers, the GIPC one, then you go and meet your sector regulator. For example, if a company is going into banking, you need 400 million Ghana cedis to do a universal banking. So why should GIPC also ask you to meet a certain minimum capital requirement? If you are going into large-scale mining, you need at least $10 million US investment. So we realize that some of the sectors do have their own minimum equity requirement that investors ought to meet. And so there's not the need for GIPC to also have that blanket one. So that is being taken away from the law. But what we are doing to protect the local investor is that in all these sectors, you realize that we have also the local content laws, which also create a pathway for domestic investors, like the mining, even when you go to Bank of Ghana in terms of banking and other related areas. And again, for trading, which is not regulated by any sector regulator, which has always fallen on GIPC since 1960s, we decided that we will have some threshold for investors who want to go into that fund. And instead of $1 million US, we have proposed $500,000 US cash transfer for foreign investors who want to go into that fund. Our reason for that proposal is based on two things. First, we realized that some of the companies use Ghana as a dumping ground. They just go for surprise credit, drop the goods here. And when they've sold those goods, they just go to banks to demand dollars to transfer to the foreign entities that own those businesses. So we realized that we were losing on both fronts. So we decided that we'll make it cash so that at least as a foreign investor, you come in with some liquidity in terms of dollars. And so when you are doing your business and you need to fall on that, you are able to fall on that so that at least it can also help stabilize our currency. Beyond that, we made it that way so that they will also operate at a certain level that is higher than that of the local investors or petty traders who had to fall on them at the retail level to be able to get some of these things done. So we are having these two balance to make sure that a new investment framework is developed for Ghana. And so these are some of the things that we are doing at GIPC that have been proposed in the new bill. And I must say that it's gone through the second reading, and we expect that before mid-year, the law should be passed for us to see the way forward on that. Thank you.
Thank you. Before mid-year, we should be looking at the law being passed. And these are insightful points. Okay, thank you, Doc. Okay, so Cedric, I can have you jump in. A lot on financing SMEs in Ghana, and for you to be heading the micro small enterprises unit of GCB. In your view, I would like to know, it means you've dealt with a lot of SMEs, and in your view, what are some of the major constraints that you've seen SMEs face? And how can banks redesign products to support these SMEs? So an SME needs financing, an SME has an idea, an SME has small startup capital that's equity, but they also need some funds to come in from a bank. What are some of the constraints you see when you sit with these SME or entrepreneur owners? And what are some of the products you see that can be redesigned to support these kind of clients?
Good morning to fellow panelists and good morning to participants. One of the major challenges we see MSMEs across the country face, especially in this 24-hour economy we're running, is the fact that cost of borrowing is still quite high. For the MSMEs, and indeed Peter did mention that. At GCB, the largest financial institution in Ghana, what we are trying to do is to try and move away from the traditional way of lending. Okay, so most banks lend by looking at the data which these MSMEs do not have. What we are trying to do at GCB is we're trying to integrate our systems or our solutions with our customers so that we have access to their sales or their transactions. We're also taking one step further by going out into the market and actually collecting these funds as well. So we tend to have daily information on both digital and have access to what is going on in the market, which then tends to help us reduce the pricing we have or we pass on to our customers. Of course, through the policy interventions, the lending, the policy rate has come down to 15.5%. At the Association of Bankers level, we have also tried to reduce the Ghana reference rate, which is directly related to how banks lend. What would then be left is the risk premium that banks or financial institutions tend to place on these on credit or to the customers. So once we have access to data, once we are close to our customers, once we've integrated our solutions into their businesses and then fed it back into our core banking, we are able to understand the business well, price appropriately, reducing the risk. That simple work tends to solve so many problems on many fronts, in the sense that we now do not need the situation where the customer would have to have end of year financials, which most MSMEs don't have anyway, before we lend, because we have the data on regular basis. It also enables us to provide revenue-based credit. So we are not only looking at a financial statement, but we see what is going on over a period of time, and we have a good idea of what you are able to do or what you need, which is making us a bit more proactive. It is also helping us move away from the no collateral, no lending situation. And so we are able to have advance credits to our customers based on turnover. And it deals with this record-keeping challenges. Under the 24-hour economy, with the expansion of the economy, what we are also seeing is that delay in payment for the SMEs, especially those working with the larger corporates, is that delay in repayment is becoming, delay in payment of their invoices when they raise them, the 60 to 90 days, is a major challenge. And so we're dealing with that by trying to finance the invoices when presented by our customers, who are the SMEs, for major clients. And so we, as we call them, anchor clients. So we're doing invoice discounting or supply factoring to enable cash to be released early, to ensure that the MSMEs are still liquid and they are able to turn around. So these are some of the challenges we've noticed, and this is how we are trying to address them.
Thank you, Cedric. That's very helpful, and also gives us a view on what is happening on in the market. Thank you. So, Cheryl, I'll come back to you on the earlier question: recent inflation, interest rate trends, and how it's affecting investor appetite in Ghana.
So I'll start with a bit of background. I think, as we know, Ghana's macroeconomic environment in the last few years has been checkered. So if we go as far back, or just as recently as 2022, the economy saw an economic crisis, or we can term it a challenge. Since then, Ghana has seen it embark on an economic reset, which comprises three-pronged approach: fiscal, monetary, and structural reforms. And all these are aimed at restoring macroeconomic stability. So I'll look at all key indicators. I'll go beyond the true judge that you asked about. I know you mentioned inflation and the interest rate, and a bit to draw some comparisons and highlights some developments in the sector I look at for. So real GDP, we know that real GDP reached about 3.8% in 2022 or 2022, and strengthened about 5.5% in 2025. And their projection is that this will go to about 4.8% by the close of this year. Now, all of this demonstrates government commitment to sustained growth in the medium term. Inflation, rose significantly from about 7.1% in 2019 to a peak of about 54% in 2022. Since then, it's declined to about 5.4% by the end of as at the end of 2025, and it continues on this downward trend. And this is one key area that the Bank of Ghana is very proud of. They tout their monetary policy intervention as being a key task, or playing a key role in managing the inflation. And this is expected to end at about 8%, give or take, still within the single digits inflation target by the Bank of Ghana. Interest rates have eased from 28% in 2024 and to about 18% in 2025. In 2026, or by the close of the year, the Bank of Ghana projects that this swing is comes to about 17.4. And this projection is watched by expectations of continuous inflation decline and strengthening macroeconomic conditions. The final indicator that I'll look at is gross international investment. So we know that gross international investment measure the external assets immediately available to and controlled by military authorities to meet balance with payments and influence exchange rates. All of these are crucial for maintaining confidence in the national currency. So we see that the reserves be from a low of 5.92 billion in 2023 to about 0.98 in 2024, representing a 4-month cover. Now in 2025, particularly in April, we saw that the reserve or reached about 10.7 billion and the targets about 13.8 billion, signifying a strengthening of the TB. Now, all of these I mentioned have been achieved by the joint efforts of fiscal consolidation and monetary tightening measures. A fiscal consolidation measure by the government, the central bank, Ministry of Planning Sector. So, they've been very key in implementing several tax policies and administration reforms. For example, there's also IMF. We know that the IMF aiming to implement that much needed support us. And Ghana aims to maintain a SMEs textile surplus of around 1.5% GDP over the medium term to support sustainability. So you mentioned what all of these means for investors, but also SMEs. Now, Anna mentioned a problem with SMEs. SMEs are the backbone of our economy. We know that they account for about 93% of businesses. And when it comes to GDP, they contribute about 70%. It's unfortunately the problems that most SMEs face, challenges that finance, high operational costs, formalization. And so SMEs continue to face pressure for borrowing costs or tighter credit conditions. Now, there's a number of support interventions that the government has indicated as recently as in the 2026 budget. We saw that one of the policies that they would like to implement is on tax. So that's registration threshold, meaning that SMEs with an annual turnover below 750,000 will not be required to register and charge VAT. There's also interventions for child funding, which is a very modern form of raising finance for SMEs. SMEs need to engage CSOs, government, to be able to tap into all of these policies that have been announced by the government. In Kenya, we'll say that the implications for investors cut across, again, in education, research, and engagement, same as for SMEs. But it's important for investors to be aware of declining policy rates and gradually reducing borrowing costs. Obviously, lower interest rates supports business expansion and investment financing. And so as SMEs seek knowledge into how they can expand and grow, tapping into the policy interventions that have been announced by the government are important for investors also to do so.
Okay, Cheryl, thank you very much. Yes, so I would come back to you, Doc. Doc with the GIPC, Dr. Safway. So are there, I know you mentioned in passing, are there, and maybe before that, let me mention that we've seen questions in the chat, and Kwekwa Jimine, we've seen your hand up. I would shortly go into a question session. So Kwekwa, at that point, I'll have you come in with your question. So Doc, in your view, which sectors or are there sectors the GIPC is prioritizing for FDI? So as much as there are road shows internationally, locally, there are particular sectors you are pitching. Given where Ghana is now, the government's policies around the 24-hour economy, the economic reset agenda, all these could play into the kind of sectors GIPC is prioritizing. Is it possible for us to have a sense of that? Then it also informs SMEs, entrepreneurs. on where they can strategically position or the types of partnerships they can look at. Yeah, so Doc, please, you can go ahead.
Thank you very much, George. Yes, our law mandates us that on a yearly basis, we to cabinet propose areas of priority based on the government direction, and we've been doing so quite often. Currently, based on the government's priority areas, we are looking at agri and agro, which is very critical to the economy, basically the backbone of the economy, how to transform most of our agricultural products into processed products and be able to consume and also export them. And in that regard, we are doing so with the 24-hour Economic Secretariat in doing that. Mining and petroleum has been on the drawing board for a while now, but the government sees it as an opportunity for us to strengthen that sector and to also look for new partnerships. So for those of you who have been following the news, you realize that Cosmos and there are other about 20 wells going forward. So it's something we have been targeting to make sure that we develop our oil and gas sector and be able to have enough oil and gas to work. Energy is also another area that we are looking at. Manufacturing, especially light manufacturing and light assembling, are also critical areas the government is currently looking at. Where I did his presentation, I think he highlighted these areas, including car assembling. Now we are looking at component manufacturing, which is very critical for us to have the value chain well developed. We need component manufacturing for those assemblies that we have. Other areas of manufacturing. Then, through the government big push agenda, it's one critical area we are looking out for a number of PPPs to be able to develop the infrastructure base of the economy. Then the digital technology, which you cannot take out, is another area. Then the last but not the least is tourism and creative. So these are the areas that the government through GIPC is currently forcing on to drive a lot of investment into the country. And there are various incentive regimes which we can later on share as we go along that are being developed. Some have been developed, some are being developed to make sure that it helps us to also target more investors who are interested in moving into this sector. So these are my initial comments on the priority. So tourism, creative art, digital technology, infrastructure, mining, oil and gas, petroleum, agriculture, agro processing, manufacturing, and then energy and renewable energy. So these are the major areas that we are highlighting and we are pursuing serious investment for the country. Thank you.
Thank you, Doc. Doc, I'll jump to one question in the chat that I think may be good to come your way, but let's see how this goes. So the question says that which industries or sector of the economy was the large influx of FDI geared towards? So reframing, the large flow of FDI, which particular industries or sectors is that coming towards from where you sit as the GIPC?
Okay, thank you very much. We have to put timelines to it. If I'm to take last year, we had a lot of inflow into the natural resource sector. I'm talking of mining and then basically mining, especially, and then oil and gas sector. The Cosmos one, there were a lot of mining takeovers, and also you remember Newmont, Achim was taken over by another company, a Chinese company, which was worth about $1 billion US. So in terms of the FDI figures that we have for last year, mining related was leading. But if you look at it from the last law, which was the 2013 Act, we've realized that manufacturing sector, light manufacturing, has been the leading area in terms of the number of investors that we have been attracting into the economy, because we eased that area and did away with the minimum equity for manufacturing. And so we realized that there has been an improvement in terms of the number of companies coming in to produce goods and then sell in the market. So these are my initial comments on that. But if it's specific on specific year or date, we can deal with that as well for him.
Okay, that's helpful. That's helpful. Thank you, Doc. Okay, thank you, Doc. There's also a question, and this is on the real estate industry. Yes, and the question is that the real estate industry has a safety belt enforced by diaspora and high net worth individuals. So largely, most of the investments we see in that sector seem to be diasporans and high net worth individuals, and they patronize the market. So speaking on returns here and what related SMEs can expect, are the returns to the real estate industry sustainable? And are they immune to these policies? Not sure which policies he or she is referring to. So in essence, the returns to the real estate industry, we see a lot of diasporans and high net worth individuals be those who patronize this. Are these returns sustainable? Are we sitting on a time bomb? And should investors be worried? Is there any one of us, the panelists, who would like to come in on this? Or Peter as well?
Okay, let me come in first. My sense of the whole real estate sector is that from government perspective, we are looking more of the affordable housing, in that we have almost about 2 million deficits in terms of our housing needs as a country. And so for us, in promoting investment into that sector, we focus more on the affordable housing to see how best we can incentivize people to go there. Of course, the diasporas, for the past few years, GIPC has been attracting a lot of diaspora. Currently, our focus is on the affordable side, but of course, we focus a bit on the diasporas, and a lot of them, when through our engagement, they could venture into. But you and I know the demand and then the high-end levels of those real estates and then the average income of the Ghanaian. And so there's the need for that sector to really assess it on the individual basis, the risk associated with it. There are a lot of them that occupancy is quite low because of the prices that they are charging for it. But of course, as for this kind of investment, it depends on the individual and how he foresees that sector. But as a government institution, we are pushing more for private sector developers into the lower end and the middle level real estate investment, where we can create affordable housing for our people.
Okay. Thank you very much, Doc. Any other comments to this question?
Yeah, so George, on the real estate sector, like Doc said, when you look at especially the high-rise buildings, most Ghanaians are actually priced out of that particular market. The target more is towards the high net worth individuals, persons in the diaspora, among other, foreign patronage. So for the long term, I mean, okay, so from the beginning, what we think triggered this was especially from the year of return, beyond the return, and it's actually now couched as the Black Star experience. That beginning of a policy shift towards inviting or creating enabling environment for diasporans to come into the country is one of the trigger points that actually led to more diasporans patronizing this. over the long term, so long as, they have them for investment, definitely they would need people to be renting them out. Sustainability is actually questioned because of the prices. For sustainability, we also think that, once government is also able to move in some of these prime areas and then also put up decent housing, not necessarily priced at the same levels that the diasporans are actually, patronizing, but housing that, the average Ghanaian can also actually access. The point is the 24-hour economy has that in mind. If you have a bulk of your workers in the outskirts, how do they easily get to the city centers to provide, or to the industrial hubs to provide the kind of services you need them to provide? So within the 24-hour economy documents, there is that need for the provision of decent, affordable housing within these prime areas that we see these high-rise buildings coming up. So it should be a balance that the private sector is targeting the high net worth, but then the government should balance this and then also get in within these spaces and then provide for the citizenry. Thank you.
It should be a balanced, consistent theme across Peter and Doctor's contribution. I don't know if the moderator is allowed to contribute, but they've said it. And what we've also seen from Deloitte's standpoint as work in the real estate sector, we've also seen that gradually there's also gravitation towards bits around student housing and accommodation, because yes, there's a deficit generally, but as students' numbers increase due to policies such as FQ, senior high school intakes increasing, we've also seen that growth in that side of real estate demand. So to the extent that there is a balance and it's not just focused on the high-end net worth, we are not going to see a bubble that will burst. But yes, there'll be sections of the market that may slow, but other sections like affordable housing, other housing types, and other commercial spaces would also take on. Yeah, so thank you for that question. Let me check. Cheryl, we had one question we wanted to bring your way. Let me check to see if you are able to speak. Cheryl, please confirm.
Can you hear me clearly?
Yes, we can hear you.
Okay, great.
And I think we are good now.
That's good.
Yes. So a lot of talk about policy, even some of the questions that have come up have been on based on government's policy. How is it influencing the kinds of investments going here, which sectors? You've heard the discussion so far.
Mm-hmm.
Do you think there are other policies that the government can consider in respect of how to support SME growth long term and investors in Ghana? A number of issues are raised on policy and government's policy direction. Do you think there are particular policies that the government can lean towards for more long-term support for SMEs and investors in Ghana?
Okay, thanks, George. I think I mentioned earlier when I spoke, I know I wasn't too clear, but the issue or the problem that we have with SMEs, so just a bit of background first, is that SMEs, although being the backbone of the Ghanaian economy, accounting for about 92% of businesses, contributing to about 70% of GDP, they contribute also, SMEs also significantly contribute to employment, about 85%, local production, innovation as well. So despite this crucial role, many SMEs still face challenges when it comes to financing. So access to finance, as we know, high operational costs and formalization. And so it's very important to help. Any policy that is introduced should be targeted towards reducing operating costs, increasing access to credits, and stimulating consumer demand. So I must say that the government has come out with a number of policies, and some of them nascent, some of them advanced, to support SMEs in this regard. And I'll speak about taxation, for example. So in the past, we've heard how onerous it is for SMEs in terms of when it comes to taxation, a lot of businesses do not have the required funding that is needed to meet these thresholds. And so when it comes to VAT registration, there's an increment in VAT registration threshold to 750,000. But what this means is that SMEs with an annual turnover of below this threshold will not be required to register and charge VAT. So what this obviously will do is that it's a measure to provide relief to micro and small businesses from the burden of administrating VAT, given the size of those businesses. Another is to look at, I think our GIPC expert mentioned this limitation of the minimum capital requirements. This is very important. So in the past, we've had, I mentioned earlier, we've had onerous requirements for SMEs. So it's important that policy measures point towards markedly reducing those requirements. And it's refreshing to note that the new GIPC bill covers all of this. So looking at also another side to look at is also crowdfunding, right? So crowdfunding is not very popular in our parts of the world, I would say, but this is also a huge benefit for SMEs and startups. So crowdfunding is a growing digital alternative financing method. In Ghana, this is regulated by the Bank of Ghana. As recently as since 2021, also the SEC, which is the Securities and Exchange Commission. So crowdfunding encompasses donation and reward equity and debt models, which allows small businesses, entrepreneurs, startups, as well as community groups to raise funding from the public. In Ghana, I think the platforms that leverage this include Ghana Pay for group contribution. So some of these, I think these measures that I've mentioned are policy initiatives that could be championed and encouraged by all of us to support SMEs.
Okay, thank you, Cheryl. Great. Very succinct and good pointers there. Thank you. So let me come your way, Cedric, because you are active in the banking space. So I have a question where you may be able to give us some insights or help us reason through. So the question is to do with a positive outlook in the economy. In essence, it's quite a long-winded one, but in essence, what are my alternatives to the now declining treasury bill rates for an investor who wants to invest? So Cedric, any 2 cents on this?
Yes. So T-bills have largely been looked at as predominantly risk-free. And so as the rates comes down, the expectation is that general cost of credit will come down. That is what the objective is, because T-bills tends to be tied to how much funds is going on the market. Indeed, in the past, financial institutions have considered this a more lucrative option, especially when you look at the risk of NPLs. And that also explains why it's coming down. But for an investor, there are several avenues. So we have a sister company, one of the companies in our groups that is consolidating, buying shares of foreign companies and selling it in smaller bits. Of course, we also have our fixed deposits, and so if the amount is large, the rates are negotiable for the investor. But the purpose of driving the rates down is to stimulate growth so that investments will go into the more productive sectors, so that it is not just on lending to the government and sitting down and work. So for an investor who has an appetite to take risk, also I would advise starting a business, That is also quite important. It will stimulate the growth, especially considering all the initiatives that the government is taking. So there are a few alternatives available, and we can take some of these conversations offline.
Okay. Okay.
May I add? Someone
Yes,
asked
go
a
ahead.
question in the chat box, and I think I would want to respond to it if you may allow me.
Go ahead. Yes.
The
Yes.
question was, how can we operate a zero NPL in a volatile economy as we have? Our NPL is still zero as we speak today, and I believe it's the risk premium financial institutions place on MSMEs is due to some of these traditional mindsets that the sector is risky, and so pricing from the risk perspective then becomes high. What we are trying to do is try to understand the business we are lending to. We are not waiting at GCB for you to need credit before we start responding to you. But we would have started working with you a long time. And as I argued earlier, we have moved away from the one monthly repayment model to more revenue-based model, transaction-based lending, and integrating digital solutions and looking at the digital turnovers that customers are making, to be able to assess the credit. And because we have the spread, we have leveraged it, and so we have a lot of insight on a daily basis into the business the customer is running before you would even come to the place where you would need credit. We would have pre-approved a credit for you already. We are moving again to the situation where we are trying to disburse credit real time on our digital platforms. And this is also on the back of the fact that the information we have gathered on our customers whom we are working with gives us a very good idea of what they can afford, when they can afford, taking into consideration the seasonalities. Peter mentioned something about patient capital. And we are working with some of the development partners to make sure that when we roll out credit to a business, it is a credit that is going to help meet the need. There is no point giving a credit of a million cedis when the business actually needs 1.5 million. And so they are not able to complete the project and get the returns. For agribusiness, we are looking at the credit guarantees like what Gersal is doing with other institutions as well, so that there is a credit guarantee of a sort to reduce the risk premium, and so the lending to the business is at a rate that the customer will be able to repay. These are actually helping, not helping for headline purposes, but helping make a difference on the field. Thank you.
Okay, thank you, Cedric. I think this was a direct question to you because I don't think I covered it on the MPO. I think it came from your bio. Yes, thank you. There is a question I would like to bring to Amma or Doc to the extent you can come in on. So one of our attendees wants to know, how much do diasporan remittances sent back to Ghana factor in foreign currency income revenues? Do we know what proportion of remittance goes towards investment or goes towards investments? So if investments or consumption. So Amma or Doc, I think it could be a percentage or based on the numbers you see from. Do you have any insights on this?
Yeah, George, I think that the answer is that most of our remittances go towards consumption. So healthcare, family emergencies, school fees, which of course circulate throughout the economy, but I think it's about 75% goes to consumption. So there's a huge issue around the cost of remittances being so high. I think we are disproportionately affected by the cost of sending money home, and most people still use the traditional services. I won't mention any brands, but the traditional companies that still use the people use for remittances are still very high. So there's an opportunity for us to really tackle the cost of sending money home, and also maybe incentivizing some of the remittances that we do receive, which are several times more than an FDI actually. So there's a huge opportunity for some kind of national strategy and policy around how we structure our remittances to circulate more into investment opportunities and development goals for the nation. So I think those are the key things that we need to keep top of mind.
Great, thank you, Amma. Doc, any additions?
I think Amma has addressed it.
Okay.
Roughly less than 20%, and mostly into stock exchange and other related areas of investment to just support those who are down here. So some of the things that Bank of Ghana and then other institutions are trying to do is to see how best some of these can be channeled into investment yielding assets so that they can then use the returns on it for other purposes.
Okay. Okay, thank you, Doc and Amma.
Can I weigh in a bit on this remittances, since it's one of the things
Yes.
that banks do? So Amma and Doc have said, but from the bank's perspective, the cost of remittances are disappearing. So we in the past, remittances, when you from the send corridor, you would pay a commission on the send corridor. Usually it's $5 to the 100, and as the rate goes up, there is a reduction there. But digital platforms are erasing that, and so today we have a situation where remittances into Ghana are coming in at a near zero rate so far as commissions are concerned. Of course, it has implications for the financial services, but how do we channel that into investment and into production? Like Amma rightly said, the majority of the remittances that come into family, and it has its own associated challenges. And so one of the things that we are doing is create a product we call Link to Home that allows remittances to come straight into accounts. The other thing we're trying to do is to figure out what these remittances, when they come in, apart from the ones used for fees, school fees and healthcare, are used for. As the conversation went earlier, we've noticed that it is usually used for the purposes of building. And so we're trying to figure out how we can have a direct relationship with these providers so that the sender would channel the funds to for the purposes, because there are a lot of challenges there. One other conversation that we've done is we have rolled out our mobile app for these customers, and so whether you are in Ghana or not, you can transact. And on that solution, we've added investments, things like the fixed deposits, treasury bills, etc. We are also trying to get some of our customers who work, with Cheryl mentioned a bit earlier on crowdfunding. And so we're working in the background to get some of our MSMEs who are at the level where they can raise funding to be on the mobile app, so that we are sort of connecting the send corridor to a purpose for production, for the productive sector. And so these are some of the things we are doing to bridge the gap. But I'm giving this information from the financial service provider perspective, who is connecting the send corridor and the receive corridor. Thank you.
Okay, I get you. So some of the innovations and some of the developments that are within the space that are helping bridge that gap. Thank you. We'll take one last question. We've hit our time on the webinar. We'll take one last question, and then we'll have our panelists give us short closing remarks. So the last question, and if I can ask Peter, if you are available, you can come in on this. Let me pull this up. So this to do with the positive outlook in the economy. No, I missed this. Yes. So given the large increases in international gold and cocoa prices, could this be attributed to the primary driver of the CD currency appreciation and inflation reduction? What are your views on this?
Okay, thank you, George. So you're looking for, is it the triggers of the CD appreciation?
Yes.
Okay, fine. So currency is what money buys, the goods and services you use to buy on the market, right? So if you look at what Ghana City buys a lot, then that helps to show where the triggers are coming from. I look at it from the export side of things. Ghana has had, let's say, a golden era for its two key primary commodity exports. Number one, gold has seen a rally. It used to be about $2,000 or so per ounce. So it hit over the $5,000 per ounce. Cocoa has also been doing very well. It hit over $12,000, per ton. Now, the drivers of the CD depreciation is demand and supply. If you need a lot of your CD to purchase these goods and services, then the supply of your CD to buy the hard currency pushes the price of your CD down. So the performance of these two key commodities brought in a lot of FX that is needed to import goods and services that we need, and also to make payments for some international transactions. The point is, the more of the dollar you have, the better for your currency. One other thing too was the gold for reserve program. So what the Bank of Ghana did was to purchase gold using Ghana CD and then brought in the FX. Another thing too is to look at investor confidence. The IMF program, if you look at the history, the trend, what it seeks to do most of the time is to bring about sanity, fiscal discipline within the economy. That alone attracts investments. If investors see that you're serious with your, management of, resources and your expenditure, then that shows discipline. So once there's confidence in the system, that alone attracts FDIs. And then finally, since the CD started appreciating, it fed into the speculative market. Speculative market meaning there's some people who trade currency. When they see the movement of the currency, they ditch, for example, the CD for more dollars. The more of your CD in the system, the cheaper the price it becomes. So it's a combination of factors, top of which is the golden era for both cocoa and gold, which have brought in a lot of FX and also helped to shore up the Ghana CD. Thank you.
Thank you very much, Peter. And thank you, attendees, for joining. Our panelists have really shared a lot. We've had Amma Jampo of the GVCA. We've had Dr. Safwe J of GIPC. We've had Charlotte of the Economic Strategy and Transactions team, Strategy and Business Design team of Deloitte. We've had Cedric McAddy, head of Micro Small Enterprises of GCB, and Peter Chawe, our presenter for today, share a lot of insight. So across the panelists, can we give one sentence closing pointer, or let's say going away facts that you would like to share with SMEs investors on the call? So across the panelists, in no particular order. Doc, I'm fine to begin with you. Any sentence or two that you want to share with our attendees on invest?
What I want to say is that Ghana is open for business, as the president has reiterated over and over again, and investors should get in touch with us on anything, right from facilitation, starting a business, so that we can handle them and help them deal with the issues and investment. Thank you.
Okay, thank you. Cheryl?
I just want to reiterate the point that, as Doc just mentioned, although there are a number of policies that the government has rolled out, and they continue to roll them out, we know that, yes, there's a lot of work that is needed on the government side. But as we've mentioned, and we keep mentioning, it's also very important for businesses, startups, small businesses, which is the focus of our conversation today, to delve deep into some research, education, and engagement. In the work that we do, we find that we meet a lot of businesses who are not aware of the policies that have been announced or the policies that are underway. And information, as we know, is very key. So it's important for SMEs to do this work or get the right advisors on board to be able to support them, handhold, to be able to do this work. For SMEs in particular, we know that we've mentioned all of the issues that plague them. We know that investors remain highly selective, focusing on low risk, well-governed, and high-performing businesses. And so it's only when these businesses are well informed that they can identify the right partners to support. Thank you.
On point, yes, on point. Consult, bounce off ideas. And for us in the consulting space, one mantra we keep saying is consult, consult, consult. So to any point you are not certain about what the next step is, so then bouncing the idea off a few individuals who are active in the space, for which the likes of Deloitte is in there. We're always happy to have a conversation about. Thank you, Cheryl. And then lastly, Cedric, your statement or two to our attendees.
Just to add to what has been shared, I think there are several interventions going around in Ghana, which makes doing business in Ghana quite exciting. But the only thing I want to add to MSMEs is to say, please formalize. It makes a great deal of difference. Thank you.
Okay, thank you, Cedric. Please formalize. Makes a great deal of difference. So thank you very much, attendees. Like we began, this has been brought to you by the UK Ghana Chamber of Commerce and Deloitte, as our maiden investor series for the year 2026. I invite Joshua with the UK GCC to give us closing remarks, and then we'll call it a webinar we've had. So thank you, Joshua. Please come in.
Thank you so much, George. Good afternoon, everyone. My name is Joshua, and I'm a trade advisor at the UK Ghana Chamber of Commerce. As we come to the close of today's session on Ghana's economic reset and what it means for investors in SMEs, I'd like to extend our sincere appreciation to each and every one of you for joining this webinar. Thank you for your thoughtful questions and contributions that you shared. We especially also want to say that we are grateful to our partner Deloitte for collaborating with us on this investment readiness series and for the insights that they have shared throughout the presentation as well and the discussion. Special mention to Yao Apialate, who gave the opening remarks. And to our moderator, George, we are also grateful for your thoughtfulness and the guidance throughout the engagement. To our panelists, Amajambo of GVCA, Dr. George Asafo from GIPC, Cedric Makadi from GCB Bank, and to our very own Cheryl Otu, thank you so much for grounding this conversation and with very, very practical realities and actionable guidance. This will go a long way to help the investors and SMEs. Today's discussion really underscores a clear message on Ghana's economic reset is really opening opportunities within Ghana, but it also requires stronger discipline, like McAdie concluded. It means we need to do more work on getting formalized. So let's work on risk, let's work on governance and make data-driven decisions. For us at the UK Ghana Chamber of Commerce, we remain committed to convening practical conversations that will support trade, investment, and private sector growth between UK and Ghana. We encourage you to stay engaged with this series, connect with the UK GCC team, and share feedback on topics that you would like us to explore as we go along. I think the next session for this series will come to you in Q2. If you'd like to follow up after today's webinar, whether to explore membership or partnerships or specific investment in SME support opportunities, please reach out to us via info@ukgcc.com.gh, or you can visit our website at www.ukgcc.com.gh. On that note, thank you once again for joining us today. We wish you a productive rest of the day, and we look forward to welcoming you to our next session. Thank you.
Thank you, Joshua. Thank you, panelists, and thank you, attendees. My name is George Annan. I've been your moderator for the session. Have a great rest of the week. Thank you.